So 5 months ago, I interviewed Lobo Tiggre, and the show was titled Uranium has the best setup of any commodity. And he was so right. Welcome back, Lobo.
Happy to be back with you.
Absolutely, me too. And just want to give you so much credit for that call because back then, a few people on Twitter were excited about uranium, but the chart was just kind of bouncing along the floor and you were really bullish. And here we are. Anyone who got in has done extremely well. So just wanted to take a second to ask you, has your thesis changed at all? Where are we now in this cycle?
Well, thank you for that. And before you even get to that, I have to say, the thesis was not necessarily Sprott's going to show up, start buying up uranium and send it to the moon in a couple of months. I didn't know that was going to happen. We're actually, at that time, we did know that Sprott was moving on Uranium Participation Corp and that they were planning to change things. But the argument was at the time was very mellow. We're gonna take over and have a more efficient management structure. We'll have access on the U.S. The UPC was only listed in Canada, like proper listing. So there's going to be access to the U.S. market. There was nothing in that about, it's going to take off like a rocket overnight. So I got to say, I didn't know that was going to happen. I didn't have any secret inside information or whatever. My case was based on fundamentals and to some degree technicals as well. The fundamental case has been very strong for a decade plus. But the fundamentals were showing this, saw step pattern of 2 steps forward, 1 step back, and the series of higher lows is what my technical friends tell me is very important. So that was the basis. I had been fundamentally bullish for a while. The technicals were telling me that, this was a trend that's happening now and good to get on. That's why we went there. So I'm glad it worked out. Anybody who watched your show and took action at that time should have done very well. The stocks, of course, have done exactly what they're supposed to do. Add leverage to the underlying metal. Fantastic. But what now? Has my outlook changed? The answer is yes and no. We're still even hovering around $50 a pound. That's still well below the cost that most miners need to be able to make money in this space. It's well below the cost. Most of the feasibility studies that you look at out there for new projects to come online, they're quoting $60, $70 uranium. So this is, as much as it's risen already, it's still not there. It still basically has to go higher for demand to be met in this space. So that's the good news. It still has to go higher, absent a nuclear accident, of course. The bad news is that incentive price of $60, $70, that's not so far from 50. Back at $25 or $30, the upside was so clear that it could at least double or more. Now, it doesn't have to double. It might. You get these markets, the momentum gets going, the speculation piles in. Now it's not just Sprott. Kazatomprom, the world's largest uranium producer, has funded a new Kazakh uranium fund that will be like Sprott, taking pounds off the market. So it's an exciting field. Things are happening. And yeah, we could see a manic peak as we've seen in the past, but we don't have to. 2021 is not the same as 2007. We didn't have Kazatomprom back then. And the flooding at Cigar Lake back then is not the same as the voluntary supply constraints the market is under now. And everybody knows that. Even the speculators know that, like OPEC, uranium is in voluntary supply reduction. So I'm not trying to rain in the parade here. I'm just saying it is dangerous to you as a speculator, or let alone investor, to assume that we have to go to $140 or more like we did last time. But you know what? Even if it just goes to 60 and 70 and stays there, that's great for the mining business. It's great for the better stocks. We can still make money in this space. All I'm saying is have reasonable expectations on the upside remaining.
Yeah, that makes sense. Even though it'll take a long time for the supply to really come online to fill that supply gap, you're saying it won't necessarily just be this huge, manic spike.
Right, not necessarily, but let me push back for a second, Elliot. Mine supply will take a while. Even the in situ miners that are pumping solution through the ground, even those guys say that it's going to take 6 to 12 months to bring their mines online once they make the decision, which most of them haven't yet. So that's true. But the people who bought pounds for investment purposes, and okay, Sprott says they're going to sequester the pounds, but that's not true of the other funds that bought uranium. They bought low to sell high. let alone the companies, the actual miners that bought low. They're not going to keep those pounds off the market forever. If they've got a mine to build, that's project funding for them. So these people will sell. And that doesn't take 6 to 12 months to start up again. At some incentive price for these people, especially the guys that bought down around 30, they're looking at a double around 60. So you could see new secondary supply from these investment sources well before the mining can actually ramp up to meet production.
Yeah, I'm really glad you brought that up, and I'm glad you have the finger on the pulse of this industry so well, because that is really, really important. So yeah, sure, there will be some more secondary supply coming on the market, and it won't necessarily take the full amount of time to get the mine supply on. Really, really good point. But you are still bullish on uranium here. It just might not be as volatile or exponential as some people might be expecting.
Right.
Yeah. But you're still bullish. So that looks like.
Yeah, no, absolutely bullish. I have 3 stocks on my shopping list right now. One is still uranium. I'm still looking to add to my portfolio if I can get the price I want on that. I guess the one thing, the disciplined speculator in me wants to add, the thing to keep in mind is that it's not treason. Okay. You're not a uranium wuss if you take some profits. And, taking profits doesn't have to mean selling or bailing or giving up on the upside. If all you do is recover, you got a 5-bagger or something, you recover your initial investment, you still have 4 times as much money left on the table as you started with. That's plenty of exposure to the upside, but you've got no risk. If it tanks overnight, heaven forbid, there's another nuclear accident or something and everything goes down the circular drain, you have no risk. You could sleep well at night and still have substantial exposure to the upside. So actually, if there's a takeaway here, rather than doom and gloom, we're close to the top, I'm not saying that. I'm saying it's not guaranteed to go super high the way it did before. And it makes sense for anybody who has a big win in their hands not to let it slip through their hands. I call this the upside maximizer strategy. There's a free report that you can download from our website on this. And it's using trailing stops to lock in gains. And I do recommend that for anybody in this space that's got a big win. If you suffered for years waiting for uranium to come around, just think about how you feel if it slips through your fingers.
Absolutely. One of my favorite things about your style is that you do not chase. You only buy things on discount, and doing that generally pays off. So uranium's in a nice bull run, but it's not necessarily on deep discount. So what areas do you see right now that are being discounted, that are still early stage, that have come into your kind of deep discount buying opportunity level?
I got to say, I don't really have anything in deep discount box. A lot of things are, if not toppy, are close to the top. You can go through the list, oil at $80 plus. That's not cheap. Can oil go to 100? Sure. Will it? Maybe. But at 80, it's much closer to 100 than, when it was a year ago, selling, 30 or let alone negative and all that good stuff. So beware and take profits in the oil patch. Or at least if you've got big wins in the oil patch, you want to make sure you don't let them slip through your fingers. Use that upside maximizer strategy. Copper, I'm extremely bullish on copper. That's a multi-decade trend, and whether countries should be pushing mandates on electric cars and all this stuff or not, they are. Set aside the ideology, set aside the attitude about whether this should be happening or not. Mr. Market doesn't care what we think or what we want. What's happening is an obvious trend that will continue for decades. And I am very bullish on copper on this front. But north of $4 a pound, can't call it cheap. A lot of these big bulk tonnage projects that have been sitting there on the sidelines for years, they needed plus $3 copper to get going. And now we're over $4. Now, that takes much longer to bring online. I'm not saying there's going to be a flood of new copper supply. I'm just saying, the rational, disciplined speculator looks at a market that is closer to all-time highs in nominal prices than, lows that don't pay the miners at all. And, you have to be disciplined about the upside. And again, if you've done terrifically well on copper stocks, make sure you don't let your big wins slip through your fingers. Anything cheap, I hate to say this, there's nothing that I would qualify in the commodity space, particularly metals and mining, as objectively cheap. But perhaps one of the most unloved and therefore most coil spring metals out there is going to be silver. And I know burned silver bugs are not going to want to hear it. The people who have given up, it's totally manipulated. I'm going to go sit on my stacks of coins at home and ignore the market. I understand that emotion, but you should understand that it is an emotion. And if you're going to take your marbles and go home, you can potentially leave a lot of big gains on the table. And I actually think that some of the reasons why silver has underperformed, its industrial side coming more and more into the fore, is actually part of the upside here. For all the reasons that I'm bullish on copper, I'm bullish on silver as well. Now, silver may not go to the moon as it has in the past. It may, in the last big gold and silver vertical market we had in 2020, was the first time since 1971 that silver did not catch up with gold on a percentage gain basis. Everybody knows this. All the silver bugs know this, right? Silver usually lags and then more than catches up with gold. That did not happen in the last big spike. So I see the market as somewhat different. That doesn't make me bearish, though. I see the industrial side of silver actually being very bullish, and the negative sentiment, and particularly for the stocks, I think creates opportunities. Silver's not going away. Its industrial uses will continue. And even if in the future it becomes a purely industrial metal, right now it's still seen as a monetary metal. So if you get moments of fear and safe haven buying, you'll get silver moving as well. So I'm not saying it's objectively cheap. People say, but it should be $150 an ounce or more. $25 is an insult. Well, don't get insulted. Look at the math. And at $25 plus or minus, the better silver miners make money. So that's the starting point. But the sentiment is so negative that you can actually buy into a good profitable business at a relative discount. So what I'm saying to answer your question here is that if you want to look at something cheap, maybe not the metal itself, but the miners, because they're so hated, are a relatively good buy. Silver first, then gold. Both of them, the miners in real terms, are, I think, selling at historically cheap levels. Because it's topical now to use the uranium example, it's been since late 2015. It's been 5 years that we've seen this pattern of big rallies and big drops, big sawtooth pattern, 2 steps forward, 1 step back. The times to buy were those 1 step backs. That's what I'm talking about, the market coming to me. And when uranium went over $50 month and a bit ago, and people were all excited, and I was saying, $50 a pound, that's not a bad time to think about taking some profits. That's not a buying opportunity. The buying opportunity is when it takes the next step back. And boy, did I get hate mail. Boy, did people get angry at me. It's going to the moon, or somebody told me there will never be, you're never going to see a chance to buy at prices before the blow off peak. Well, guess what? From 52, it went down to sub 40. And I can't say I predicted that. I just said to people, watch for that type of opportunity. So that's the philosophy. It applies to all of them, to the silver things, to the gold stocks where I'm waiting for money, to the market to come to me. You look at the typical volatility in any commodity or price, and you use that. You make that your friend.
Absolutely. And it tends to work out if you buy on the step backs, like you just said. So you do see currently, the sentiment is terrible in silver. The price action in the miners, the price action is absolutely terrible in the miners. So are we at that kind of step back moment where there are some things that intrigue you at these levels?
Yes. And one of the other stocks on my shopping list is a silver play that has, I think, some pretty exciting potential. It's one of these success in progress plays. Like they're starting to hit consistently, and I want to buy this stock. But I think I'm not the only one that sees that, and it has not come back. Actually, it did come back one day. Somebody got filled at my target price, but only a few shares were offered at that price, and I didn't get filled. Somebody in front of me in the queue got filled, and my bid was left on the table. But good things come to those who wait. So no, I see it absolutely. And by the way, when I said in real terms, I think the most real terms that are relevant for gold and silver stocks are actually gold and silver prices. And if you price them in the metals that they produce, that makes it relevant, not just on a theoretical, God's money kind of basis. But the fact is, this company produces this commodity, and that's relevant to its own profits and prospects. And so if in silver prices, a silver stock is objectively cheap, or in gold prices, a gold stock is objectively cheap, that's of interest to me, because these are not businesses in liquidation like uranium was a bit ago, or still actually, unless prices go higher. Uranium still doesn't work for most miners, even at these prices. Silver at plus or minus 24, 25 bucks, that pays the better miners. Gold at 1,800, that's a fantastic price for almost, you have to be a crappy gold miner to not be able to make money at these prices. So these are good businesses. These are good cash flowing, in some cases, dividend paying businesses that are on the discount rack because of bearish attitudes. I mean, really, there's no reason for the gold and silver stocks to be beat up as much as they are, not the better ones, even on prices doing nothing. But unless the price is going up, investors aren't happy, it seems, in our space. I think that's a mistake, and I think that's an opportunity that people can take advantage of right now.
Could not agree more. Very, very well said. And the question is everyone asks, why would you want to buy silver? It hasn't performed well. I don't see a reason to really buy it. But the reason why you're bullish at all on silver is kind of the macro framework. And Jack Dorsey just tweeted, big mainstream, big tech CEO just tweeted, hyperinflation is coming. So I really wanted to get your thoughts on kind of the macro backdrop and kind of the reasons why people should even think about precious metals in terms of, inflation and what's coming in the US potentially.
Okay. I'm not actually convinced that hyperinflation is coming, or perhaps, eventually, the Roman Empire fell, but it took hundreds of years. So, the US empire, the US dollar, it falls sometime, but I'm not sure that falls in an investable time frame. So I'm reluctant to make these great, bold predictions like this. He's talking up his cryptos actually when he says that. I do think, however, and this is relevant to your question, I do think that card is in the deck that we're playing with. And the question is, do the powers that be lose control of the house of cards, the financial house of cards that they've built globally? If they can manage to massage things and keep the game going for a while longer, I don't think we see hyperinflation of major currencies anytime soon. But if the transitory yarn unravels to such a degree that it really scares people and it changes dynamics in such a way that their tools don't work and they're stuck and they lose control, that could happen. We could see hyperinflation in the next few years. And if that happens, I think you would want the physical metals. That could actually cause knock-on effects, of sort of movie level proportions. I'm not going to predict the world of Mad Max, but if the world of Mad Max did happen, I think you would want to have some physical, physical real value. And the more concentrated that value is, the more convenient, and therefore silver and gold. But even absent the Mad Max scenario, just huge volatility, great uncertainty, markets crashing, things breaking, governments reacting in panic. I think the safe haven assets, and the dollar in that context is not a safe haven asset, like real safe haven assets. I think they do really well. So that is, I think, a good argument. You could say that's also an argument for the cryptos. I think I'm not anti-crypto, and if you want to add that to your portfolio, that's fine. But I think putting all your eggs in any one basket is ill-considered. And to the degree that governments start outlawing these things, they may have phenomenal black market value, but it's not going to help you buy groceries if they're illegal. If panicking governments step in with a very heavy-handed way. And we see it right now. Sudan is having a coup. What do? They arrest the leadership and they shut down the internet. So if your wallet is full only, your metaphorical wallet is full only of tokens that need the internet to transact, sure, the internet will survive Sudan's shutdown. But if you need to eat today and all you have is electronic money, you're in trouble. So I would argue against, going all in on the cryptos in that kind of scenario. But backing off from these, terrible visions of dystopian future, the basic fundamentals there is that the money printing goes on at full speed. Monetary and fiscal policy is still very, very easy, even if they taper. That doesn't mean tighten. And that's just monetary policy. You also have fiscal policy, which remains very easy, and they're talking about spending more. So all of this, I think, is very bullish for anything real. Actually, all commodities in general, it's very bullish for anything real. Even in a weak economy, the printing press is the more powerful force. So anything real has upside, but very specifically gold and silver as monetary metals have, I think, a great deal of upside. So yes, I think you do want the physicals. And if you want to speculate, that's just to harden your portfolio, harden your assets, protect yourself like insurance. Even if you never use it, you still want to have insurance in case your house burns down and you hope your house doesn't burn down. Same thing with physical bullion. But if you want to make money, and I'm right about the impact of the fiscal and monetary regime around the world and what that will have on commodities in general and monetary metals in particular, then it's the stocks. These same ones we were just talking about being unloved and on sale in real terms are the way to potentially profit from the trouble that I do see ahead.
Wow. Just so many mic drop moments in this interview from you, I think. Very, very well said. I agree. So do you think it's possible that we could be seeing kind of another tech bubble in terms of blockchain? And so it just seems like we have very fervent sentiment, bullish sentiment in the cryptos, right? Which are tech proxies, and very bearish sentiment in the metals. And that it seems very similar to 2000 almost. Is it possible that we could see kind of a blow off top in tech and then maybe from there, a huge multi-X move in gold, kind of like we did in 2000?
It's certainly possible. And like they say, history doesn't repeat, but it sure does rhyme a lot.
Yep.
And I can see that. So I am persuaded by the premise that momentum-seeking money has sloshed over into the crypto space and away from other things like gold. I don't think that that the cryptos and Bitcoin have entirely eaten gold's lunch. A lot of the money that's gone into that space never would have been interested in gold in the first place. So it's not all coming from gold and going into there. It's just part of the story. And I also think that it adds back. This is not a one-way flow. I think that the cryptos have educated entire generations of younger people who would have never paid attention to gold and silver before. They've educated them about the dangers of fiat money, and it has them thinking, okay, what are my choices? What are my alternatives? I have met young people. I have an intern who couldn't have cared less about gold and silver until he made money on cryptos and started thinking, how do I protect myself against the demise of fiat currencies? Yeah. So I don't accept the premise that the crypto craze, if you will, is all bad for monetary metals. I just think that momentum chasing money chases whatever the flavor of the day is. And that's been pot stocks before, it's been cryptos before, it's been other things before, and sometimes it's the metals. And it comes back, is what I'm saying. It's never permanently gone. As far as the market shift in another .com crash, I'm actually somewhat skeptical of that. There's a lot of nonsense companies out there. There's a lot of ridiculous valuations for people that have no proven business, and that's going to take a lot of money to money heaven for sure. But there are real businesses being built out there. There are problems being solved. There are better mousetraps being delivered to the market space using this technology. Not so much Bitcoin that I can think of off the top of my head, but Ethereum, that platform, is being used even for some gold-backed cryptos. And it's being used for other DeFi applications that I think have real markets, that can serve people better than the banks. And frankly, the banking business needs disruption. I think that's a good thing. A customer needs to be served. And I'm very happy to see the DeFi movement do that. Now, my problem as a speculator is I'm not a computer programmer. I'm not sure I can tell which one of these guys has the right, the best mousetrap or the one that's going to win. Or to use an old metaphor, show my age here. I don't know if you remember the old VHS versus Betamax controversy. And the Betamax was objectively the better technology for recording movies back when you had tape. But VHS got there first. It became more popular. I don't know, it was better promoted. it was objectively the inferior technology that took over that market space, and Betamax just went away. So you could even pick the better mousetrap in DeFi and have some other guy who's a better promoter take all the market share, and your pick may not do well. So I'm not telling anybody to rush out and buy DeFi stocks. I'm certainly not buying any myself yet. I don't feel competent to judge in this space. But as a market commentator and answering your question, I see this happening in the space. I see opportunity, and some of the stuff is of real value. So I'm not sure that we're dealing with quite the same type of bubble as we saw in 2000.
That's totally fair enough. And I agree. Blockchain technology is revolutionary, and there will be amazing businesses that come out of it, even if we don't see a huge speculative bubble on the way there. But I just want to go back to one last thing you said before closing. It's just that you said, and it's important, you're not going to be concerned about hyperinflation really until the psychology changes and fear sets in, and people stop believing the Fed and their tools run out. So you're watching for that in terms of really expecting a hyperinflationary dystopia. Is that correct?
Yes. Well, there's a very specific trigger here, and this is the dollar, right? If the next Latin American country has another hyperinflation, that doesn't really shake the world. Even if the euro were to go into, it's hard to see, but if the euro were to go into some very, very high inflation regime, it would not have quite the same impact as the dollar doing it. If the dollar, blows up, that changes everything. Until the world has moved off the dollar, that changes everything. So here's the trigger. It's one thing for the dollar to have trouble. It's one thing for the price to fluctuate. It's one thing for the DXY to, drop a bit. People move funds around. It's not a game changer. But if at some point foreigners, the vast trillions of dollars outside the United States held by foreigners, if at some point they decide the jig is up, or whether it's a meme or just a shift in an idea whose time has come, but if people start to fear, the US dollar is no longer worthy of being a reserve asset. The US is acting like a banana republic. It's defaulting. An example would be this stupid platinum coin idea. I understand that it can be legal. I understand that the way the Treasury and the Fed work and so on, that within the structure of the US government, like this could actually be done for the US to pay off its debts. But the reality is that if you mint $1 trillion coin that's not worth $1 trillion and you pay off $1 trillion worth of debt with that, that's no different from any banana republic printing up, more zeros on their bolivars or whatever, and defaulting through inflation. So that kind of banana republic tactic could cause foreigners to say, we don't trust the dollar anymore. We're done. And if that happens, that's the psychology I'm saying to watch for. When foreigners no longer trust the dollar, then all this ability, this exorbitant privilege of the US to export its inflation that goes into reverse, well, by then it's beyond too late. You can't stop, you can't tighten enough to deal with that reverse flood coming back. We could see the dollar blow up. So that's the trigger to watch for.
Brilliant. We will watch it for that. Thank you so much. And where can people go to learn more from you and learn more about your incredible mining stock picks that have done extremely well, especially in uranium recently?
Thank you very much. For the 2 or 3 people that didn't stop listening when you said that, independentspeculator.com is the address. And I'll say, rather than try to sell you something right away, hard sell, I would encourage people to sign up for the free weekly newsletter that I put out. It is no hype, no spam. If you sign up for that, you will not get a flood of advertisements in your inbox every day. I try to provide actual value and original analysis in that thing every week. And if you find that my insights are worth something and you want to try to tap into my expertise on the specific stocks, sure, I welcome you to do business with me. But that would be the starting place. Judge me based on that.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.